So now, to finish up this work together for 8-1, we've put together the adjusting entries and we've put together our closing entries. And now, in order to update the account balances for those entries, we have to post those account balances to the general ledger. So we're going to take each part of our journal entry and we're going to post it and go through the posting process. So we'll start with our supplies expense adjusting journal entry and post that entry. Okay, so we're going to start out by posting our adjusting entry for supplies by going to the first account, which is our supplies expense. I'm posting $713 to that supplies expense account. So here's all of our ledger accounts, our general ledger with all of our accounts in them. So I flip over to where supplies expense is. And I'm going to start by putting the date, which is July 31st. And here, you can write, although I don't believe an Applia will let you, you can write when you're doing these manually, adjusting entry. And your post reference is going to be your general journal, page 4. And we're doing a debit of $713. Bring the balance over to the balance column for $713. And then we take that post reference and we bring it back up here into our journal and put $540 here. Then we do the supplies credit to our supplies account for $713. Again, this is, oops, my bad, sorry. This is on the 31st, and it's an adjusting entry. General journal, page 4, and our balance was $713, but we're going to credit for, pardon me, our balance was $963. We're going to post that credit to our supplies account. Pardon me. And then we're going to bring our balance down by that amount. So we take the $963 and we subtract $713, and our new balance for our supplies is $250. Now, how do we know we've done that correctly? If we look over on our worksheet, now you can see where our supplies balance is $250 in the balance sheet column, right? So over here, out here to the left in those trial balance columns, the balance was from our ledger $963. Then we did our credit for the amount that we used up during the period for $713, and then we have our ending balance of $250, okay, which now matches our ledger. So we're good. We're going to take that account number, 140, and post it back here in our journal. Now we're done. We do the same thing with our insurance expense. $300. Look for our insurance expense account. July 31st. Adjusting entry. Okay. And our post reference is General Journal, page 4. And we had an amount in our insurance expense of $300. We're debiting. Bring the balance over, $300. Take the account number, put that back over here. Okay, and now do the credit to our prepaid insurance, $300. The 31st. General Journal, page 4. We have a debit balance. We're crediting it for $300. bringing our balance down to $900. Bring the post reference over 150 to our journal page. Now we're done with that. Again, to check that this is correct, we can simply look on our worksheet and make sure that the prepaid insurance account balance in the balance sheet column is $900, and that's correct. So we're good. Okay, now we move on to our closing entries. So we're first going to close our sales to our income summary. So we take the balance in our sales account of $5,511, and we're going to post that now to our sales account in the ledger to close out our sales account in the ledger. The 31st, and we can label this closing entry. Again, this may not let you do that in Applia, but you can do that when you're writing it manually. And it's coming from General Journal page 4. And the amount is going to be, our balance you can see is $5,511, and we know from our worksheet that we have to debit $5,511. And that brings our balance down to 0. Okay, so if we have a credit balance of $5,511, we debit it for $5,511. It brings our balance down to 0. And then we take the 410 and put the reference up here in our sales, 410. And now we've closed our sales. And we're going to close it to our income summary. So we bring the credit balance of our income summary and post that to our income summary account. July 31st, closing entry. Sales. General Journal page 4. We are going to do a credit of $5,511 and make our credit balance $5,511 and take the 330 pardon me, and bring it over here, 330. Now we've closed out our sales account. Now we're going to close out all of our expense accounts. We're first going to close our expense accounts to our income summary with a $2,181 entry in our income summary. So we go over to this income summary again. It's on the 31st, and we're going to put the closing entry of expenses. And it's from General Journal page 4, and the amount is $2,181 as a debit. And if we take the balance of $5,511 and subtract 2,181, we get that our balance is 3,330, which should equal to our net income on our worksheet. So we know we've done this correctly. And you can see that we have a credit balance, which means we have a profit. Okay, we're going to take that 330, bring that over here, and put the post reference into our journal. And then we're going to close out each of these expense accounts. So our first expense account is advertising expense for $821. So we find the advertising expense, the 31st, and we can put closing entry, and it's from General Journal page 4, and the normal balance is $821 on the debit side, so we're going to post a credit of $821, and then that brings our balance down to 0. So at the end of your closing entries, all of your temporary accounts should have double slashes in them to show that their balances are 0. Okay, and then we post that back, 510 for advertising expense. And then we do insurance expense, 31st, closing entry, General Journal page 4. It has a $300 debit balance, so to close it, we're going to credit $300, and then our balance is 0. Take the post reference, 520, put it back over here, 520, go to miscellaneous expense, 31st, closing, entry G4, debit balance, so we're going to credit it for $347, bring the balance down to 0, take the post reference $530, bring it back over here, close out supplies. Pardon me, supplies expense. 31st, closing entry, G4, 713, we're going to credit, bring our balance down to 0. Take the post reference 540, put in the post reference column. Next, we're going to close out our income summary to our capital account. So we go back over to our income summary account in the ledger, which is here. And now, if it's got a $3,330 credit balance to close it, we have to debit it, which is what our journal entry says. Debit income summary for $3,330. So we're going to close it. Closing entry for the income summary. G4 is where it came from. So it's got a credit balance, so we're going to debit it for $3,330. So that credit balance, debit for the same, and you bring the balance down to 0. Take the post reference, $330, and post it here. Now we do the credit to the Darlene Wong Capital. Go up to the capital account, 31st, and we're going to do closing entry for the income summary from General Journal, page 4. So we have a $3,330 credit. If this is the debit side, this is the credit side, and that makes sense because if we have a profit, we're going to increase our owner's capital by the amount of that profit. $6,543 plus $3,330 is going to give us a $9,873 credit balance in our owner's capital account. Now we post that, put that post reference back over here, 310. And then our last one is to close out our drawing. We have our drawing is back here, $2,100. So we're going to post that to our Darlene Wong Capital as a debit. We're going to do the 31st, closing the drawing. General Journal, page 4, and it was for $2,100. It's going to reduce that balance down to $7,773. We take the post reference 310, bring it back over here, and then we do the drawing, and we're going to close General Journal, page 4. We're going to close that debit balance by crediting it. Brings the balance down to 0. So now all of our temporary accounts will have 0 balances. You should know that because they're temporary. We close them at the end of fiscal period. And all of our permanent accounts will have whatever their ending balance should be. They should be fully updated. So the capital account will now be adjusted and updated for our net income and also our drawing. So if you think about it, now this should be the same balance that you would have as the ending capital balance on your balance sheet. Because if you look at this, this is like beginning capital. This is your net income. So we would add our net income, and then this is our drawing, and we would subtract our drawing. And then we would have our ending capital, which is this. Oops, I think I forgot to put the post reference here to my drawing account, which is 320. Sorry about that. 320, the last one, 320. Okay? And then you're done with your closing entries. If this income summary had a loss, then you would have a debit here. That would reduce your credit balance that was previously here for your capital. So you would have capital, beginning capital, debit, which is a minus net loss, and minus your drawing. And so that would work out mathematically, just like we've talked about with that capital formula. Okay, so this is just doing the capital formula in the ledger through the journal entries, etc. Okay, and then that's it. That's just doing the adjusting and closing entries and journalizing and posting them. Okay, so APLIA 8-1 is for homework, and it's going to go through all of the adjusting, all of the closing entries, and then all of the posting relating to them. Okay, thanks everybody.